you are taking time out today to attend this annual general meeting, being convened through video conferencing in compliance with the provisions of the Companies Act 2013 and circulars issued by Ministry of Corporate Affairs and SEBI. Company has made all necessary arrangements to enable the members to participate in the meeting through the video conferencing facility and vote electronically. As a requisite quorum is present, I call the meeting to order. As the annual general meeting is being held through video conference, the facility of appointment of proxies by the members is not made available. I would now introduce other board members and KMPs who have joined this meeting through video conference. Sushil Kumar Roongta, Independent Director and the Chairman. Sudha Pillai, Independent Director and Chairperson of Sustainability and CSR Committee, joining from Delhi. Arun Seth, Independent Director and Chairman of Risk Management Committee, joining from New York. Pradeep Banerjee, Independent Director and Chairman of Nomination, Remuneration and Compensation Committee, joining from Mumbai. Holders Relationship Committee, joining from Gurugram. Amita Chatterjee, Independent Director, joining from Mumbai. Priyavrat Bhartiya, Non-Executive Director, joining from Delhi. Ashti Bhartiya, Non-Executive Director, joining from Delhi. Deepak Jain, CEO and Managing Director, joining from Gurugram. Vijay Kumar Srivastav, Whole-Time Director, joining from Noida. Varun Gupta, President and Chief Finance Officer, joining from Noida. Dipanjali Gulati, Company Secretary, joining from Noida. Hari S. Bhartiya, Co-Chairman and Whole-Time Director, is not able to join due to unavoidable reasons. Statutory Auditor and Secretarial Auditors are also part to the shareholders. Good afternoon, everyone. I would like to extend a warm welcome and thank you all of you for joining us today for the 6th Annual General Meeting of Jubilant Ingrevia Limited. 2025 has been a transformative year for Jubilant Ingrevia Limited. We prioritized high-value specialty and nutrition investments, advanced digital and sustainability efforts, and reinforced operational excellence and customer-centric culture. Despite external challenges, we strengthened cash flow, sharpened our competitive edge, and laid a strong foundation for the future growth and value creation. Consequently, this achievement has recognized several international awards, including the prestigious World Economic Forum Award for pioneering the use of fourth industrial generation 4IR technologies. Market update. Global chemical sector is gradually recovering from inventory destocking. Specialty chemical sector is seeing a volume growth, though pricing remains steady. Pharma end use continues its steady momentum with consistent volume growth and stable pricing. Agrochemical sector is witnessing a recovery in volume growth with pricing still muted. Nutrition sector volumes are stable across the animal and human nutrition. China plus one trend is opening new opportunities, especially in specialty chemicals. EU anti-dumping duties on Chinese choline products are expected to significantly strengthen our position in the European market. Despite microeconomic uncertainties, we remain cautiously optimistic as the volumes growth returns across segments and pricing remains stable in specialty and nutrition segment. With favorable shift in product mix and ongoing cost initiatives, we are confident in sustaining our improved EBITDA momentum. As the textiles market segment, we anticipate an acceleration in overall revenue growth as well. On recently imposed US tariff, the impact on our sales has been minimal. In FY25, our sales to US accounted for only 6.9% of our overall revenue, out of which only 2% of the overall sales remain affected by duties levied on our exports to US. Alongside, higher tariff levies on Chinese goods may also create favorable conditions for our US exports in terms of volume and pricing. Financial and business performance. FY25 highlights. We concluded FY25 with revenue of rupees 4,178 crores, a marginal increase from rupees 4,136 crores in FY24, led by a double-digit volume growth in specialty chemicals. However, overall revenue growth was affected by price decline in acetyl segment. EBITDA rose by 22% to 557 crores, driven by strategic pivot towards a higher value-added specialty and nutrition products. This shift contributed to 230 basis point improvement in margins, reaching 13.3%. Profit after tax grew 37% to 251 crores, lifting earnings per share to 15.9 from rupees 11.6 in previous years. These strong financial results lay a robust foundation for delivering our pinnacle vision. Throughout FY25, global logistics faced persistent challenges from post-pandemic disruptions and geopolitical tensions in the Middle East and Red Sea congestion. Despite these headwinds, we held impeccable delivery performance through proactive scenario planning, dynamic rerouting strategy, and real-time coordination with carriers. By Q3, ocean freight rates had largely stabilized, driven by collaborative renegotiation and optimized routing, underscoring our precise execution and strategic use of data and digital intelligence. Specialty chemical business recorded 15% growth during the year, driven by stronger sales of pyridine and its value-added derivatives, diketene-based products, and expansion of our CDMO offerings. With the pyridine and picoline segment, we successfully maintained our global leadership and market share and are only non-Chinese scaled player. Our fine chemicals business maintained strong momentum with double-digit growth, led by our leadership in pyridine derivatives and increased customer engagement. Our CDMO business is gaining strong traction. Pharma, agro, and semiconductor end-use segments. Nutrition and health solution segment saw strong volume growth, led by increased demand for choline products, while niacinamide volumes and pricing remained stable. During the year, we commenced our human and cosmetic grade CGMP compliant plant at Bharuch facility. We are seeing strong customer interest in human and cosmetic grade products and expect to ramp up production during the ongoing financial year. In chemical intermediates business, we observed sustained growth in ethyl acetate sales volume. However, SV anhydride volumes remained low due to weak demand from the paracetamol sector. Overall, prices in the segment stayed relatively benign, which affected our revenue and margins in the segment. Our efficiency program, Surge, Lean, BE, and saving initiatives, energy saving initiatives continue to deliver strong annualized savings of rupees 120 crores in FY25. We have now launched Lean 2.0 to drive further cost optimization and margin improvement in the current financial year. We continue to invest in our pinnacle pillars. Customer centricity. Customer centricity remains core to our strategy during FY25. Through our key account management program, we have engaged with over 150 CXO level leaders across US, Europe, and Japan, unlocking 70 plus new opportunities. These engagements through dedicated customer roadshows are shaping our strategic direction as we continue to execute with discipline and build our future growth platform. 2. Innovation. R&D innovation remains central to our competitive edge. With 150 scientists across 3 state-of-the-art R&D centers driving innovation in complex chemistries and process intensification. Our Gajraula pilot plant rigorously tests new reactions to ensure safe scale-up. With our 40 active pipeline projects across 30 plus chemistry platforms and 8 CDMO collaborations underway, we are making strong progress. We have also deployed 30 plus advanced digital use cases, earning recognition as India's first global lighthouse plant by the World Economic Forum in chemical industries. ESG and sustainability 3. At Jubilant Ingrevia, environment, health and safety (EHS) is essential to our sustainable growth and embedded across all our operations. As part of our broader ESG agenda, under Pinnacle Vision, we aim to lead in safety, quality, and ESG performance. We have taken decisive steps to reduce emissions, conserve resources, and promote circularity by partnering with local vendors and use of clean energy and minimize carbon footprints, which is also aligned with our global climate goals and customer expectation. These efforts, with our EcoVadis Silver rating, place us in the 94th percentile, along with S&P Dow Jones Sustainability Index DGSI ranking in the 92nd percentile within the global chemical industry reflects our commitment to sustainability. Safety is a mindset that guides every decision. Supported by ISO 45001 and Responsible Care Certification. Our flagship initiative, Project Apollo, is fostering a zero harm culture by shifting safety from compliance to ownership with proactive risk management and shared accountability. The rollout of 5S standards also enhanced overall worker safety at our plants with zero fatalities reported in FY25. 4. World-class operations and cost initiatives. Our integrated cost optimization program, Surge, Lean, Business Excellence, and Energy Efficiency, delivered over rupees 120 crore in annualized savings in FY25. Through data-driven yield monitoring and Six Sigma initiatives, we reduced power and fuel costs by 11%. We reduced effluent treatment expenses by 13% and improved workforce productivity by 20%. We have launched Lean 2.0, which is phase 2 of our cost reduction program, targeting an additional rupees 100 crores in saving in FY26. People centricity. In a rapidly evolving business landscape, the strength of our organization lies in the capabilities and commitment of our people. Our new leadership team is now fully settled and is on course to achieve pinnacle vision with high energy. As we continue to pursue ambitious vision of our ability to attract, retain, and develop skilled talent remains a critical success factor. The people-centric ethos is woven into our initiatives, from leadership development and inclusion programs to digital enablement and well-being support. Our recent Great Places to Work certification is a testament to the trust, pride, and camaraderie that define the life at Jubilant Ingrevia Limited. It confirms our conviction that when the people thrive, performance follows. With Q1 revenue rising to rupees 1,038 crores from rupees 1,024 crores last year. Despite microeconomic headwinds and seasonally soft demand, volumes grew 5%. EBITDA surged 29% year-on-year to rupees 153 crores, driven by margin gains in specialty chemicals and nutrition, supported by ongoing cost optimization efforts in the overall business portfolio. Our specialty and the nutrition segment continue to lead with strong engagement and growing pipeline. Contributing 63% of our revenue and 90% of the EBITDA, these business segments remains central to our strategic growth. In acetyl segment, we retained market share in both domestic and EU markets. For acetic anhydride, driven by strong customer engagement and strong cost position. We also saw volume growth in ethyl acetate and acetaldehyde segments, supported by steady demand and operational efficiency initiatives. In closing, as we advance towards our pinnacle vision, we expect continued growth in FY26, driven by momentum in specialty chemicals and nutrition, and a recovery in the acetyl portfolio. Our Lean 2.0 cost efficiency program remains a key focus to further enhance margins. We are also on track to deliver the major CDMO order in early 2026, which will accelerate our growth trajectory. We sincerely thank our team and business partners for their unwavering dedication and enduring pillar of our success. To our shareholders, your continued support and trust is deeply valued, and we remain committed to delivering sustained growth in shareholder value. Thank you. We now take up the formal agenda item of the meeting. The statutory registers as required under the Companies Act 2013, certificate issued by the secretarial auditors pursuant to the SEBI Share-Based Employee Benefits and Sweat Equity Regulations 2021 and other documents mentioned in the AGM notice are available for electronic inspection on the NSDL website under the tab AGM Documents. The statutory auditors and secretarial auditors have expressed unqualified opinion in their respective audit reports for the financial year 2024 and 25. There are no qualification, observations or adverse comments on the financial statements and matters which may have any adverse effect on the functioning of the company. As the AGM notice, along with the annual report for the financial year 2024 and 25 are already circulated to the members through electronic mode, I take the notice convening the meeting as read. In compliance with the provisions of the Companies Act 2013 and listing regulations, the company has provided e-voting facility to the members from August 26, 2025 to August 28, 2025 to cast their votes electronically on all the business items set out in the AGM notice. Members have not cast their votes through remote e-voting and are participating in this meeting may cast their votes through the e-voting system provided by NSDL. The e-voting facility is active now. We will now take up the agenda items as set forth in the AGM notice, listed as ordinary business and special business. Thereafter, questions from by the members registered as speaker shall be taken up. Ordinary business. Item number 1A of the notice to consider and adopt the standalone financial statements for the financial year ended March 31st, 2025, along with the reports of the Board of Directors and the auditors thereon. Item number 1B of the notice to consider and adopt the consolidated financial statement of the company for the financial year ended March 31st, 2025, along with the report of the auditors thereon. Item number 2 of the notice to declare a final dividend per share of ₹1 each for the financial year ended March 31st, 2025. I am interested in the agenda number 3. I now request Sushil Kumar Rungta to take up the chair for this item.
Thank you, Chairman. Item number 3 of the notice to appoint a director in place of Mr. Hari S. Bhartia, DIN 00010499, who retires by rotation and being eligible offers himself for reappointment. I now request Shyam S. Bhartia to chair the meeting.
Thank you, Mr. Rungta. Item number 4 of the notice to appoint a director in place of Deepak Jain, DIN 102-55429, who retires by rotation and being eligible offers himself for reappointment. Item number 5 of the notice, reappointment of Messrs. Walker, Chandok and Company, LLP, Chartered Accountants as statutory auditors of the company. Now, item of special business considered by the board as unavoidable are proposed for the approval of the members. Ordinary resolution, item number 6 of the notice to ratify remuneration of rupees 4.7 lakhs to Messrs. J.K. Kabra and Company, cost auditors for the financial year ending March 31st, 2026. Item number 7 of the notice, appointment of Mrs. Arshi Bhartiya in 02840983 as director of the company. Item number 8 of the notice, appointment of Messrs. DMK Associates as the secretarial auditor of the company. Special resolution. Item number 9 of the notice, reappointment of Mr. Pradeep Banerjee in 02985965 as an independent director of the company. Item number 10 of the notice, reappointment of Mr. Shiraz Ahmed Chaudhary in 0016185 as an independent director of the company. Item number 11 of the notice, reappointment of Mr. Arun Seth in 00204434 as an independent director of the company. Item number 12 of the notice, reappointment of Mrs. Sudha Pillai DIN 0226395 as an independent director of the company. Item number 13 of the notice, reappointment of Mr. Sushil Kumar Runta DIN 003090302 as an independent director of the company. The text of the resolution along with the explanatory statement is provided in the AGM notice circulated to the members. I would now invite 3 shareholders who have registered in advance as speaker shareholder. I would now request moderator to invite the speaker shareholders.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. I now invite our first speaker shareholder, Mr. Rohan Mehta, DPN client ID IN 30021426819681, to please go ahead.
Good afternoon. My name is Rohan Mehta. I thank the management and the board of directors for this opportunity. Firstly, what is the current CDMO revenue? Please share the latest full year figure and the current quarterly run rate. Secondly, what is your 5 to 7 year vision for the CDMO segment in terms of scale, key capability additions, targeted customer mix, and margin profile? Thirdly, over the 5 to 7 year horizon, can CDMO revenues exceed 50% of the consolidated revenues? If yes, what milestones, capacity additions, and capex would enable this, and by when? Lastly, on funding, do you plan to raise capital in the next 12 to 18 months to support CDMO growth via equity, debt, or any hybrid instruments? Any initial view on the quantum, timing, use of proceeds, or potential dilution? Thank you.
Thank you. I now invite our next speaker shareholder, Mr. Jasmeet Singh, DPN client ID IN 30205010148339, to please go ahead.
Moderator, hope I am audible. Respected Chairman Shyam Bharti, Directors, KMPs and fellow shareholders attending this AGM today, I am Jasmeet Singh joining you all from Delhi. Now let me start my note. Chair, your opening note was brief yet informative. Additionally, the annual report presented to us is quite exhaustive, and this leaves very little to ask the learned board. I have couple of observations and related questions to ask. The first one is that in the year under review, our top line revenue has remained muted. Would like to know the key challenges or headwinds impacted growth. In this regard, how our leadership team is planning to accelerate the revenue expansion in the coming quarters and years. Now, the second one pertains to our three main business verticals. Those are specialty chemicals, nutrition and health, and chemical intermediates. Would like to know the relative performance of these three verticals. While specialty chemicals remains our core segment, but at the same time, how the management is planning to expand the other two. Thank you, Chair, for declaring the dividend. I also acknowledge our contribution to the society by way of our CSR programs. Thank you, Dipanjali and Naresh ji and your teammates and the moderator who have helped me to interact with you with this august gathering today. I am Jasmeet Singh signing off here.
Thank you. Our next speaker shareholder is Mr. Gokul Maheshwari, TP and client ID 120330000197058. Please go ahead.
Good morning, Board of Directors and fellow shareholders. My name is Gokul Maheshwari and I'm speaking on behalf of my mother Ram Janki Maheshwari. Her DPN client ID is 120330000197058. My question to the Board of Directors and the top management is that a lot of manufacturing companies in India are investing in solar or renewable power, which is helping them reduce their cost of operations. So while in the last 2 years our cost has been stable or coming down in the power cost, but this is a very substantial cost item which is close to 11-12% of our revenues. So while I understand that you have invested and done a tie-up with O2 to get 30% of your power from green resources over the next few years, but apart from the ESG angle, I want to understand what is the cost implication of this. Are we doing anything to reduce this cost burden, which can be sort of helpful to improve our profitability? So if you could just give a glide path over the next 2-3 years of the 460 crores of power cost of FY25, how would it look over the next 2-3 years, despite increased volumes and scale of business? My second question is that the management, we have, as a business, we have won certain CDMO businesses, contracts, which will start. One of it is perhaps already started, and the other one is going to kick off from January of 26. Is the timeline as per the contracts? And given the geopolitical changes with respect to tariffs, etc., is there any threat of these CDMO contracts coming under delays or cancellations or any change in terms or etc. on that? Thank you and wish you all the best. Thank you.
Thank you. I now request Deepak Jain to address the shareholders' query.
Thank you very much. Thank you, Mr. Rohan Mehta, Mr. Jasmeet Singh, and Mr. Gokul Maheshwari for all your insightful questions. We deeply appreciate you trusting us and investing and staying as our long-term investors, but also coming up with such nuanced questions after studying our business. So there are quite a few questions, so let me just take them one by one. Let me start with Mr. Rohan Mehta's questions. He had 4 questions. The first one is on the CDMO business. What is the revenue? What is the share of the business? I think as we have communicated in our investor calls, quarterly calls as well, CDMO remains one of the biggest growth drivers within our specialty chemicals business. It is a business we are investing significantly behind. And as we communicated in our February Investor Day meeting as well, this is a business we are hoping to double this year versus last year, and at least grow 2.5 times next fiscal year as our big agro CDMO contract kicks in Jan to March quarter of later this fiscal year. So this business should continue to scale up significantly. Our overall aspiration in this business is to take it to 10x of its current size over the next 5 years, which is what we communicated in the February meeting. So we stay focused as well as on track to deliver on that growth. We want to be the preferred partner in the spaces of agro, pharma, and semiconductor for our CDMO customers. And with the traction we are getting across all the three segments, we are quite confident that we should be able to expand our funnel significantly in coming years and deliver on that aspiration. Just to give you a sense, you asked a question on the customer mix as well. If I take pharma as an example, within the span of last 1 year or so, we have almost doubled our funnel in terms of new opportunities. Similarly, on agro, we already announced 2 contracts, and we have at least half a dozen more in various stages of discussions and negotiations with the customers. And we are hopeful that in coming months and quarters, we'll be able to announce more outcomes coming out of that. And similarly, on the semiconductor side also, we have at least a dozen different opportunities, which I have talked about even in the last investor call, where we are doubling down and expanding our funnel. Your last part of the question on CDMO business was on the capabilities we are building. So obviously, given the strong momentum we are seeing from the customers, we are in parallel investing in our capabilities to be ready to deliver on those volumes as well as contracts. Number one, we have expanded our BD team in India, but also in the key markets of Europe, US, and Japan, where we have hired new talent, and they are on the ground now and chasing as well as responding to all these inquiries that are coming from our customers. We have also expanded our R&D team. As Chairman talked about in his opening speech, we have now almost 150 plus people in our R&D team, and we are expanding it further every passing month. And thirdly, we are also investing in capacities. We have almost 10 multipurpose plants between our Gajraula and Bharuch sites, and we are taking further capex to expand the capacity further. I think the third question was about the relative contribution of CDMO going forward in the business. While we don't give specific numbers or composition of the business for future years, what I can tell you very confidently is that specialty chemicals business is our fastest, now the biggest as well as the fastest growing business. And within that, our CDMO and fine chemicals business are already growing at healthy rates, pretty healthy rates of 15 to 20% or even more each. And with that, I can say that in next few years, CDMO plus fine chemicals should be almost touching 50% or even more of the overall company revenues. Finally, the first question from Mr. Rohan was on the funding plans. As we have been saying, and you can see the track record from the last 8 quarters as well, we have been funding major part of our investments from our internal accruals. And with the increased EBITDA over the last 8 quarters, we have been able to meet most of our capex requirements through those internal accruals. Going forward also, we hope to continue to invest at least 600 to 800 crore every year to support the growth that we have envisaged. And we believe most part of it we should be able to generate through our EBITDA performance and EBITDA numbers. We may need to increase our debt incrementally in certain years, but we are hopeful that we should be able to do in a very prudent manner without putting any significant pressure on our balance sheets. Those were the 4 questions from Mr. Rohan. I hope I have answered all the 4 questions fully to your requirement, Mr. Rohan. Let me meet to our next investor, Mr. Jasmeet Singh, who had 2 questions. The first question was regarding the top line growth and why it is muted, and the relative contribution in the growth from three different businesses. So Mr. Jasmeet, thank you for asking that question, and you're absolutely right. At the overall company level, as Chairman outlined in the opening remarks, we have grown incrementally. More or less, we are flattish. But the real understanding of our growth story can be built only when you dissect the business by three different businesses. There's a fundamental shift which is happening in our portfolio. If you see our specialty chemical business as well as our nutrition business, both these businesses have grown in healthy double digits. In fact, the volume growth is north of 15% in both the businesses. Of course, some part was shaved off because of the price reduction in these two segments. But even on the net basis, our specialty chemical business grew at 15% in FY25, while our nutrition business grew at more than 10%. And we hope to even further accelerate these growth rates in coming quarters and years in both these segments, because 70% of the investments that we have made in the last 3 years of 2000 crore have gone into these two segments. And hence we are, and with the traction we are getting from the customers, we are very confident that these two businesses will continue to grow. But what has also happened is acetyl business is going through its regular down cycle, which happens once every few years. And especially after COVID, that cycle has stayed for at least last 6 to 8 quarters. And that has impacted both the volumes as well as pricing in that segment, thus offsetting some of the growth which came from our specialty and nutrition businesses, leading to a situation where the overall company revenue are looking flattish at an overall level. But when you dissect it into these two parts, you will see that the areas we want to invest in, which we want to grow, and where we have invested in the recent years are actually starting to fire and giving us the growth as well as margin uplift that we always wanted. The second part of your question was regarding the growth drivers in each of the businesses. I think Chairman has covered in detail in his opening remarks, so I won't go too deep there, but just will say that if I just step back, as per our Pinnacle stated strategy also, which we disclosed to the shareholders in our last few investor calls, in our specialty chemical business, as I said, that's our biggest business and the fastest growing. We will continue to double down on CDMO, as I explained in response to Mr. Rohan's questions. Fine chemical is another business which continues to do very well for us with both pyridine and diketene derivatives. And we are hoping the growth will only accelerate there with all the investments we have made. And the core pyridine business, we continue to remain the leader globally in that business. And we, with all the initiatives we have taken both on customer front and cost front, we are hopeful that we will remain, in fact, we are confident we'll remain leader there. And we are also doing some debottlenecking of capacity there. And with that increased capacity, we should only grow that business further in coming years. For our nutrition business, we remain a global leader in vitamin B3 on the feed side. With our new plant, which got commissioned early part of this calendar year, we are hoping that the mix of that business will change significantly. And with that, we should be able to not only grow that business, but also improve its margin profile significantly. We are also in the process of launching a few new human nutrition grade products, including choline bitartrate, which we have already launched a few quarters back, and we're getting good traction in the market. And we are also seeing good traction in both of our animal nutrition and human nutrition premix businesses. Human nutrition premix business is relatively new for us, but we are getting very strong traction from some of the marquee customers there. And with the opportunity in choline opening up in Europe with very heavy tariffs on China, we are very confident that we should be able to capitalize that opportunity and grow our human nutrition business at mid-teens kind of growth rates. And finally, in the acetyls business, we have seen some recovery even in the last quarter, and we are hoping that that momentum will continue. The recovery is slower than what we had anticipated originally, but nevertheless, we are already seeing some improvement in the volumes in both paracetamol and agrochemical segment, where bulk of the acetic anhydride is consumed. And similarly on ethyl acetate also, we have increased our volumes in recent quarters. So we are hopeful that on the back of higher utilization of our plants, as well as the cost improvement initiatives we have taken, we should be able to improve margins as well as revenues in that business in coming quarters. Finally, let me move to Mr. Gokul Maheshwari's questions. Thank you, Mr. Gokul Maheshwari, and good to see you again. I remember you had asked questions last year also on behalf of your mother, and please pay our regards to your mom, who has been a long-time shareholder. Your first question was about the power costs. So you are right. Our power cost has been in the range of 10 to 12% in the last few years. But if you see the trend quarter on quarter, you would already see that with all the initiatives we have taken to optimize our power and utilities cost, the impact is visible in the P&L already. Of course, the O2 contract you talked about is a big shift in our energy mix, and we feel very proud because we have always focused on sustainability and ESG as a strategic initiative. And with the launch of O2 contracts, almost 35% of our power requirements will move to renewables. And the good news is these contracts are starting the current quarter, and obviously we'll talk about it in the next quarterly call, and you will start to see the impact of these contracts coming into our energy cost starting this quarter itself, but more meaningful impact will come in subsequent quarters. Just for your information, given your overall question on the power cost, we are taking several other initiatives to optimize our cost related to energy and power, focused on our boiler efficiencies, all the digital initiatives we have taken under Project Surge, and many other initiatives related to procurement of fuel and other things. We are hopeful that you will see a meaningful shift in our energy cost or power cost in coming quarters. And the final question was the impact of tariffs. I think Chairman already, particularly on the CDMO contracts, Chairman already addressed that question at an overall level. The exposure for us for the US market is about 6 to 7% on the overall revenues. But the good news is so far only 3 or 4 of our products are part of the list which has seen increased tariffs of 50% for India. These products overall constitute only 2% of our revenues. And despite the 50% tariff, even today, our cost position is far better than our Chinese competitors, both on the back of our cost structure, but also with the fact that duties on these products, even now, from China are higher than what they are for India. So with all of those factors taken into account, we feel we are in a very strong position in the US market, not just for these 4 products, not just for the broader portfolio where there is no impact of duty, but also in these 4 products. Also from a CDMO contract perspective, as of now, the contracts we have signed, including the big one of $300 million, we don't see an impact of tariffs on that because that is also part of the exemption list. So stepping back, we are hopeful that this tariff situation, obviously at an overall level, hopefully it will improve for the country and for the sector. But from our portfolio perspective, as of now, we see minimal impact in coming quarters or years. So with that, I hope I have answered all the questions. Just in case you have more questions, please feel free to write to us at the investor ID, and we will respond to you in due time. Thank you very much once again for asking these questions. Now, let me just hand it over back to the chairman to continue with the proceedings of the meeting.
I think Deepak has tried to answer all your questions. If any of your questions remain unanswered, you may please write to us at the investor ID, and we will respond to you. Thank you, Deepak. Members may note that e-voting on NSDL platform will continue for the next 30 minutes. Thereafter, the proceedings of the meeting shall be closed. Members who have not cast their vote yet are requested to do so. Board of Directors have appointed Mr. Rupinder Singh Bhatia, Practicing Company Secretary, as scrutinizer to supervise the e-voting process. Results of the e-voting shall be declared not later than 2 working days of the conclusion of the meeting. The results shall be available on the website of the company Stock exchanges and NSDL shall also be available at registered office and corporate office of the company. I once again thank you all for participating in this AGM.
On behalf of the members present, I propose vote of thanks to the chair. Thank you everyone for attending the meeting.